Hello and good day. This is the daily analysis of USOIL and NATGAS USD for January 5th. As predicted, the price had an aggressive downward movement at the start of Monday and was eventually settled. It collected liquidity from this area and reacted to the order block zone. It is expected to continue its bullish trend and eventually be settled. It will collect buy-side liquidity from here and react to the daily order block zone. With the increase in geopolitical risk factors, this move could occur so that it reacts to the order block zone. If geopolitical risks decrease, the price of oil could enter a downward trend. It would continue its decline, collect sell-side liquidity from this area, and enter the unicorn zone. This is a monthly zone that has been refined by the weekly and daily levels. We can look for a trading position in this area as it reacts. Furthermore, if the market price eventually reaches this specific order block zone, we can certainly use this strategic opportunity to enter a high probability sell position. By analyzing up to this time frame, on the 4-hour chart, we can see that the price, as predicted, made an aggressive move upward, had a brief pullback around the order block zone, and then entered a bearish phase, collecting the sell-side liquidity from here, which was expected for the price. There was an increase in bearish momentum, and ultimately, the price reached the optimized daily order block zone. The 4-hour chart reacted, and with the collection of liquidity within the order block zone, it closed, which led to an aggressive upward move in the price. The price closed above the 4-hour order block zone, which suggests that the price is likely to continue its bullish trend. If we observe a reversal in the price trend within the 4-hour order block zone, we can enter a sell position at this point. If there is an increase in bullish displacement and the price closes above the zone, it can continue its trend. Its bullish trend may continue, eventually entering this optimized daily order block zone. If it reaches the 4-hour level, in this section we can look for a sell position targeting the swing low in this area. By analyzing up to this time frame, there is a level. We can observe the aggressive price movement in this section. We see liquidity being taken on the sell side, and after that liquidity being taken on the buy side. Here, liquidity was collected, and after that it entered a bearish phase, and finally, with liquidity being taken on the sell side within the order block zone and inside the ATR shadow. A close occurred, which formed a Ryan soldier strategy for us, and we can use this opportunity to enter a buy position. And we set our stop loss behind the zone and place our target at the swing highs at these points. We see an aggressive upward price movement, and by analyzing the RSI, we notice that with the corrective move down, it has entered a high potential zone, which indicates the continuation of the trend. It is a bearish price trend, which we observe afterwards. It has moved upward with an aggressive move even in the upper section. It has entered the overbought high potential zone, which indicates the continuation of the trend. This is a profit area where the price could have a short-term pullback to the CP zone. If it gets rejected from this zone, it could return to the trend. It can continue its bullish trend, but with increased momentum, it could enter the FVG zone or an order block zone. After that, it could get rejected from this area and then continue its bullish trend, which we can observe. We use the RSI as a price deviation indicator so that when the RSI reaches the oversold zone, and by identifying a divergence as a deviation, we enter a buy position targeting the swing highs in this area. On the 30-minute time frame, we see that the price has moved downward. It collected the liquidity towards the sell side here, and finally, with another pullback in that area, it closed, which is a swing failure pattern strategy. Here, we have a setup where, if the price pulls back to this order block area, we can enter a buy position targeting the swing highs in this section, which is a suitable trading opportunity to achieve a favorable risk-to-reward ratio in the market, which we can also see in this part. The price has entered the potential area, and after the completion of the downward correction, the price can return to the trend, continue its upward movement, and ultimately collect the buy-side liquidity here. And in that 4-hour order block area, which has been optimized to a 1-hour block, we can look for a sell position in the market. In the USDT gas sample, it was anticipated that with the start of Monday, the price would have a short-term rise. and after that it would enter a downward phase with the target being that same order block area in this section, which of course with the start of Monday and the increase in pressure selling, the price reacted with a gap up, and with the increase in selling pressure in the market, it could react to the 50% level of the order block. After that, we can look for a trading strategy in the market to the target of the highs in this area or the fair value gap in this section by reviewing up to this 4-hour time frame. We see observe that the market price has successfully reacted to the daily unicorn zone and the optimized 4 levels, and it is currently closing within it. This specific candle is an ITAR candle, and with its definitive close inside that zone, it effectively forms a Ryan Soldier strategy for us to follow, and we can now look for opportunities. You can use this favorable opportunity for a potential buy position, or as a strong confirmation of this specific trade, we can wait and see if a clear bullish candle forms very soon. Set the swing or behind the unicorn zone, with a specific profit target of risk to reward ratio of 1:1, 1:2, or the identified price gap in the market. In this section, even on the 1-hour time frame, we can see the price movement, and by analyzing the RSI, we notice that in that zone there is a potential sell setup indicating increased selling pressure in the market. But with a closer look, we see that the price has formed some wicks here, which could, after a short-term correction in this area, after that or after liquidity is collected, move toward the sell side, and liquidity is held below the zone. Unicorn could enter a bullish phase to balance out the price gaps, and in this area, if a bullish candle closes above this doji candle, we can enter a buy position at this point, targeting the limited gap in this section, and with a risk-reward ratio of 1:2, it gives us our target. Wishing you success and profits.